What's up guys, welcome back to my YouTube channel. It's Mas. Today we're going to take a look at 5 trades you could have caught this week in order to make money using the inversion model. Let's get right into it. This strategy is pretty simple because you only need 3 steps. First step is a creation of a 15-minute fair value gap. Then you wait for price to enter this 15-minute fair value gap and create a M1, M2, M3 or M5 fair value gap in the opposite direction. Then after you enter the 15-minute fair value gap with aggression by creating a fair value gap on either the 1, 2, 3 or 5-minute chart, you wait for this fair value gap to get inversed so you can play the reversal for a 1-to-1 risk to reward play. Before we jump into the example of this week, let's take a look at what the model actually looks like. You see on this chart, this is an example from last week. We have a 15-minute fair value gap to the left right here. Okay, so I drag this little box, which tells me that the buyers here are the one aggressive and are the one controlling the market. So then I wait for price to tap this 15-minute fair value gap. This is my step 1. So I wait for price to enter inside this 15-minute fair value gap. This is my step 1. Then I will scale down to the 1, 2, 3, and 5-minute chart to see if we entered aggressively inside this 15-minute gap. So right here, I scaled down to the 1-minute chart, and as you can see, we entered this 15-minute fair value gap with aggression. Why? Because we created a bearish 1-minute fair value gap right here. And what is this fair value gap telling me? It's telling me that the sellers are located between this candle's low and this candle's high right here. So the next step, this is step 2 right here, and the next step is only to wait for this fair value gap to get disrespected, so inversed, so we can take our long entry right here with a 1-to-1 risk to reward with our stop loss just below this low here. Now I only have to wait for this fair value gap to get disrespected so I know the buyers are the one controlling the market. Right here, this is where we inverse this gap. I will put my limit order right into the inverse fair value gap, stop loss below this low, and I will aim at the most recent high for a 1-to-1 risk to reward ratio. So right here I went long, and as you can see, in few minutes you hit your target. So if I have to recap it again, step 1, enter the 15-minute fair value gap right here. Step 2, you want to look for price to enter aggressively into this 15-minute fair value gap by creating a fair value gap in the opposite direction on either the 1, 2, 3 or 5-minute chart. Then as soon as you disrespect this fair value gap, this is your third confirmation. You know that the buyers are the one controlling the market and that you will probably see a potential reversal for a 1-to-1 risk to reward play. Now that you guys understand the strategy, let's take a look at this week's price action. So we're starting here on Tuesday, June 3rd. So right here we have a 15-minute fair value gap right here that is bullish. What is this fair value gap telling me? It's telling me that if price enters here aggressively, we will possibly see a scalp back to the upside because the buyers are the one controlling this price action right here. So I will wait for price to enter this 15-minute fair value gap, which is my step 1. Then I will scale down to the 1, 2, 3, and 5-minute chart to see is there aggression when we entered inside this gap. So right here I will scale down into the 2-minute chart, and as you can see, we have a bearish 2-minute fair value gap that was created when we entered the 15-minute bullish fair value gap. So right here, this is my second confirmation. Now, what do I have to wait? I will wait for price to disrespect this fair value gap right here. So I will go long for a 1-to-1 risk to reward play. Right here, this fair value gap is telling me that the sellers are located between this candle's low, this candle's high. And if we're truly bearish, we should respect this fair value gap to create new lows. But if we're bullish, we're going to disrespect it and have a possible entry back to the upside. So now I'm waiting for this fair value gap to get inversed. And as soon as they get inversed, this is where I will take my long entry. You can put your limit order back into the gap, or if you like aggressive plays, you can enter straight market right here, putting your stop loss right below this low here, and then you aim for a 1-to-1 risk to reward. So this is where I buy. And as you can see, in few minutes, you hit your target. Now that we just took this long, let's go to the 15-minute chart and see is there a possible short opportunity, okay? Why is that? Because if we created a bearish fair value gap inside this range, then you could possibly play shorts. And this is exactly what happened right here. We have 2 fair value gaps here. So right here, I know that the sellers are located here, and we could have a possible play back to the downside if we enter aggressively into this zone. So right here, my step 1, I entered into a bearish fair value gap. So now I'm gonna look for a possible play back to the downside if we create a bullish fair value gap on either the 1, 2, 3, or 5-minute chart. So right here, let's take a look at what's going to happen. Chop, 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 and right here, this is where we sweep high into the fair value gap still, and we create this small fair value gap here on the 1-minute chart. So we're still inside this 15-minute zone here, okay, and we created a bullish fair value gap. So step 1 is checked right here. Step 2 is also checked right here because we have a 1-minute fair value gap. If we're truly bullish, we should respect this gap in order to create new highs. If we're bearish, we're going to be displacing below this fair value gap and creating an inversion. So right here, my step 3 is to wait for this fair value gap to be disrespected, and I will then go short as soon as we close below it. Right here, this is where I close below it. Super small close. I'm putting my stop loss right above this high and putting my target at a 1-to-1 risk to reward. So this is right here my third confirmation when I disrespect this bullish fair value gap. So I will go short right here, stop loss right above this high, and wait for price to deliver back into my take profit. And right here, as you can see, it took some time, but we hit the target right there. Now let's take a look at the third opportunity of the week, which happened on Wednesday, June 4th. So right here, you can see we have some buy side liquidity sitting right here. But the first step is to wait for price to tap a 15-minute fair value gap. So if I go to the left here, you can see that we have, in fact, a 15-minute fair value gap located just above this high right here. So right now, I will wait for price to tap this 15-minute fair value gap and see, is there any aggression when we enter this fair value gap? So market opened right here, boom, we tap. So we sweep this buy side liquidity and tap into this 15-minute bearish gap. What is this gap telling me? It's telling me that you could see a possible short to the downside for a 1-to-1 risk to reward play if you see some weakness from the buyers right here. So now I will scale down to the 3-minute chart to see, is there any aggression from the buyers and the sellers? So right here, as soon as we tap this 15-minute fair value gap, which is my step 1, I want to see if I have my step 2 checked, and right here we have the step 2 checked also. Why? Because we created a bullish fair value gap when we entered the 15-minute bearish fair value gap. So what is this gap telling me? It's telling me that the buyers are located right here, and if we're truly bullish, we should respect the zone in order to create a new high. So this is the second confirmation checked right here. Now I wait for price to disrespect this fair value gap, so I have my third step also checked. And now on display right here, you can see from this swing low to the swing high right here, we only have one fair value gap in this whole range. So I know that this is a really good play. I will then go short, stop loss right above this high, and drag my take profit for a 1-to-1 risk to reward play back to the downside. Right here, I go short. And as you can see, in a few minutes, you hit your target. After I'm done with the first trade, I'm always looking to play my profits. So let's take a look at the rest of the day to see, is there any fair value gaps created on the 15-minute. So right here, right after we took that short, you have a 15-minute bullish fair value gap created right here. So now, what is the next step? This is the step 1. I will wait for price to enter inside this 15-minute gap and see, is there any aggression from the participants when I enter inside this box. So now scale down to the 1-minute chart, and I'm trying to look for a possible reversal right here. So boom, right here, this is where I get the confirmation. We enter inside this 15-minute gap by creating a bearish 1-minute fair value gap. So again, if we were truly bearish, we should have respected this zone right here to create new lows. But right here, we disrespected this gap. So this is my confirmation to then go along with my stop loss right below this low here. And I will target the most recent high for a 1-to-1 risk to reward. So this is where I go along. And in few minutes, you hit your target again. Now let's take a look at the final example of the week, which happened on Friday, June 6th. So right here we have a 15-minute bullish fair value gap. So we expect a bullish reversal if we can find weakness right here when we enter this gap. So let's take a look at what is going to happen when we enter inside this gap. Boom, we sweep this low, enter inside this gap. So I will scale down to the 1, 2, 3, and 5-minute chart to see which participant is in control. So right here I will scale down to the 3-minute chart, and you can see this is the second criteria that is met here. So first one being enter inside the 15-minute zone, second one being create a bearish fair value gap when you enter a bullish 15-minute fair value gap. So an opposite fair value gap created when we entered into the higher time frame PD array. And right here, the third confirmation would be to wait for price to close above this fair value gap right here, which is going to tell us that the buyers are the one controlling the market and that the sellers are being squeezed. Now let's wait for price to disrespect this fair value gap, so it gives us an entry to the upside. So right here, this is exactly where I disrespect the fair value gap, and this is where I would go long, stop loss below this internal low here, and I will go for a 1-to-1 targeting the most recent high here. And you can see in a few minutes you hit your target and more. Hopefully you guys enjoyed this video and gained some value out of it. Thank you guys so much, and I'll see you on the next one. Peace out.